Hello everyone. Welcome to Excellence Forum's ABCD of Accounting. I am Priya Joshi and we are conducting the Income Tax Literacy series. Today we will discuss the income from house property. Let's first understand what is a house property as per the Act. It could be your home, office, a shop, building or some land attached to such building like a parking lot. All types of properties are taxed under this head by the Income Tax Act. So, whether it could be a self occupied house property or a let out house property. Most importantly, Income Tax Act does not differentiate between a commercial house property and a residential house property. So, to put it simply, in case of a residential house property, whether it is a self occupied property or a let out house property, the income from it is considered to be a income from house property. But in case of a residential commercial house property, only if it is a let out property, then its income is considered to be a income from house property. In case of self occupied commercial property, the income or expenses with regard to that is considered to be a part of income from business or profession. Now, what are the conditions to be this income taxable under this head? The first is the house property should consist of any building or land appertaining thereto. The taxpayer should be owner of that property and the house property should not be used for the purpose of his own business or profession. So, if these conditions are satisfied, then income from such property is considered to be income from house property by the Act. Now, let's understand how the income is actually computed. We have to find out certain amounts. The first is the gross annual value. Then we have to also consider some deductions like the municipal taxes, standard deduction, and the interest on borrowed capital. So let's discuss these one by one. The first is gross annual value. It is the higher of the following two, either the expected rent or the rent actually received or receivable by the taxpayer during the year. So, out of the sum calculated above, any loss incurred due to vacancy in the house property shall be deducted, and the remaining sum computed shall be deemed to be the gross annual value. So, to understand it in simple words, first you ascertain the higher of expected rent or the rent actually received or receivable. Consider the higher of the two. Then the next step is deduct the vacancy allowance, that is loss on account of property remaining vacant during any part of that period or year, and the resultant amount is the gross annual value of the house property. And what are the different deductions? The first is municipal taxes, including service tax levied by any local authority in respect of that property only if the taxes are borne by the owner or the taxpayer himself and the taxes are actually paid by him during that specific year. Then it is allowed as a deduction. The next deduction is standard deduction. It is the 30% of net annual value of the property, but it is allowed only if the property is a let out property during that previous year. And the third is important, which is interest on borrowed capital. There again, in case of a let out house property, the actual interest incurred on capital borrowed for either acquisition, construction, repairing, or reconstruction of that property is allowed as a deduction. Whereas, in case of a residential house property, interest incurred on a loan for acquisition or construction of the house property is deducted up to rupees 2 lakh. And in case of a capital borrowed for reconstruction, repairs, and renewal of that property, the amount allowed as a deduction is rupees 30,000. There are certain more conditions and provisions to this specific section. We will discuss those sections and other important concepts related to house property in our upcoming video, and also we will discuss a specific illustration with respect to computation of income from house property. So, if you have any questions, comments about this specific video, please post them in the comment box and request you to please like, share and subscribe to our YouTube channel. Also request you to visit our Facebook and Instagram page. Thank you friends. Bye.